Now, before we jump into a couple of the questions that came in, we're going to revisit this. But the Market Sentiment Tool did go into the bearish sell mode, and we're looking at 7 signals have turned bearish. Of the 13 signals that we use for the Market Sentiment Tool, 6 are hanging at neutral, and there are no bullish signals at this time. The Market Sentiment Tool is a setup of 13 broad-based indicators that Ernie set up after evaluating, let's say, 40 or 50 different ones, and seeing which ones gave a more strong and reliable inkling of when a shift in the market might happen. And so you see here we have put-call volume ratio, number of days SPX up, the SPX gap over the SMA 20, percentage of stocks over the SMA 20, stocks hitting their new 52-week high and low, or the ratio, I should say, of high to low, VIX, TRIN, SPX RSI, days over the SMA 20 for SPX, days over the SMA 100, gap over the SMA 100, percentage of stocks over the SMA 100, and the MACD gap as well. That one just you can see went in. Well, real quick, how are these fences set? Well, if I go into the Market Sentiment Tool and I go into the individual ones, we can click on Details, and what you'll see is a histogram of this particular sentiment indicator, the put-call volume ratio. And the fences that are set here, when the ratio is below 0.6, that's when it moves into bearish mode. And it's bullish when the ratio is above 0.99, historically. And you can see this sort of on the histogram chart here. So what we see here is we're currently at 0.56. And that's giving us that bearish signal, because what happens here, historically, it tends not to delve too far deeper down into this range. What do we have right now? The put-call volume ratio is at 0.56, meaning there's almost twice as many calls as there are puts across the market. But it doesn't tend to drift down here and stay down here historically. It wants to gravitate back into this range. And how is the put-call volume ratio going to gravitate back? It's, well, once we start seeing more put buying, that starts to balance out this at the calls, and you get closer to that 1 ratio. But as you can see, when the put-call volume ratio gets closer to 1, it very rarely goes above that, very rarely stays in that range. It's going to want to start to come back here. So more calls are being purchased, or you're seeing a volume on more calls than you are puts, and that's going to start to swing us back into this gray area here, meaning here you were probably down in the market. We see that flip, means it's closer to going back into this historically. Okay, now, history-wise, what is the history? Now, if you take a look at any of the indicators versus SPX, you see the full chart here, and we can go back as far as 2014 to see the different comparisons, time frame-wise, of movements in the SPX versus the put-call volume ratio. And so you see when we got up here at 0.8, we had a dip in the market going down here. The put-call volume ratio dipped down to 0.55. It started to move back up. And you see the different trends here, where that goes and along those lines. You can, of course, look at that through various different years, as I mentioned, or all. And but that's just too much. Large spike here, of course, in that case. But that's how you can view the histogram. What is the histogram? Where are these fences set and why? And what is the actual history of all time, 1 year over the next year, and so forth as well. Okay, so we're in a bearish sell right now. We want to see what happens today, because we did originally see SPX still up this morning, but it reverted, it stayed up there about 30 points, and we've seen the VIX drop down to 12.5. One thing I'll always mention is I'm starting to see these bearish sell warnings. Usually when I see 2 or 3 bearish sell warnings, the strong bearish sells here in the deep red in a row, that's usually when I start doing something to maybe take income on my bullish positions, hedge my bullish positions, add an extra market hedge for the more leveraged portion that might be bullish or neutral in my portfolio. One of those right now I'm looking at, I didn't do too much today. I think I only picked up 2 contracts. But on Monday, if it's still down and the market's still trying to trend up and I'm still seeing that bearish sell signal, a strong bearish sell signal, I apologize, I'm likely going to be buying some extra calls on the VIX, maybe 45 to 60 days out in time, just as a broad market hedge. You can also buy puts on SPY. I've just been using the VIX when it drops down in this range, down below $12.25, around $12, because historically we haven't seen it that low, and every time we do, it comes back up maybe to 14 or 15 for a few days and then starts to settle back down. All that's dependent on a lot of things in the market, however, so we want to take a look and see what's going to happen. Got to pay attention to the news, got to pay attention to the economic events we know that are coming up. JP Morgan, WFC earnings coming up. Citi, of course, I believe reported their earnings this morning as well. So just some things to keep in mind as we start entering into that next earnings season and moving forward. Everything going on with Powell, everything going across in the global economies, and also global strife going on everywhere as well. It's going to affect this, but we're starting to see those bearish sell warnings, so you might want to consider taking action at some point for a broader hedge on your positions or a broader market hedge as well. July 12th, 2 in a row, bearish sell warnings. So now I'm getting hesitant. All this discussion we've had, it's great for theory, great for structure. I can tell you honestly, I did have some bull puts that expired. I had three of the usually 4 or 5 I have open. I have 2 more open for next week. I'm probably going to close those on Monday. And I'm not going to open new positions on Monday because I have seen 2 bearish sells, strong bearish sells in a row. That's usually my trigger to start adding extra hedge to my portfolio, lighten up on my bullish spreads, and I might not be opening any bullish ones right now. I'm not saying I'm opening bearish ones yet. I'm going to buy probably puts. I'm sorry, apologies. I'm going to buy calls on the VIX possibly and some puts on SPY. 515, that's not what I was looking for. There's the light buys. There's the sell warnings. Okay. So yeah, we started to see the sell warnings more briefly back in 3.8 and 3.11. And this one here, this was my concern. 321. No bullish. 6 bearish, 7 neutral signals, but that was close enough. Eased off a little bit, but then we're still here. And then you started to see those drops occur down to 51, down to 50, 61, 50, 51. And that's when you started to see the light buys, 418, 417, and 416. And when you start to see the light buy warnings, now we're getting into 4 and 5 bearish signals as opposed to the neutral. And that was right around, sorry about that, lost my pen. That was right around this time period, which was right around what? Near the bottom. The MACD shows us. And that's when we started getting the last buy signals. And there we go. Okay. So with a couple of hiccups we saw in there too. We saw some when we got to here with this little one. That was in May. You saw the one I pulled up, the bearish sell warning in May 15th, wasn't it, right? Oh yeah, starting May 9th. May 15th was the strong bearish sell right in here. Before what? Before this little dip. And then we never went back to light buy, if I'm not mistaken, after that dip. But then we went right back to the sell warnings, and we've been there, and now we're at 2 bearish sell sentiments. That's what that is. And you say, what is the source of this market sentiment? I mentioned that at the beginning of the presentation, maybe before you logged in. It's 13 broad-based indicators. Ernie tested about 50 to 60 broad-based indicators, looking at the historical histogram to set the different fences. So here, the put-call volume ratio just entered into a bearish mode a little while ago. Put-call volume ratio is bearish when it's at 0.60. Okay, meaning there's much more calls being bought right now than puts. So this ratio is at 40% less than 1. It's at 0.6. A lot of calls. And well, market's humming along. Investors are buying calls. But what this is telling you is that when this gets to this area here, where the fence is at 0.60, historically, it very rarely, seldomly gets lower. It's got to revert back to this level, getting back closer to that mid-range here at about 0.6, 0.7, or so forth. Historically, Rick, that's just what's happened with this indicator, okay? The put-call volume ratio. So what does it mean? How is it going back to this level? More people are buying puts, and the put-call ratio is getting back closer to 0.8, 0.7, 0.9, because more puts are being bought now than calls. Why? Because the market's probably falling at that point. But once that teeters the other way, and we get up to about 0.89 or 0.9 or so, very seldom does the put-call ratio get above and stay above 1 for extended period of time historically. So Ernie had 50 indicators like this that he ran tests on to see which ones hit what type of trigger more consistently when a shift in the market happened. And these 13 that he came up with are essentially the best ones after all of that testing and all of that research that he did, which showed historically to have a more consistent foreshadowing of a market shift. And what is the time frame? As we showed earlier, each of these different 13 indicators, data going back to 2014 of when you can see the different areas of when this hit. Yeah, we were seeing a market decline, but then once the put call volume ratio went back towards 1, what happened? The market just took off. And same thing here, when the put call volume ratio went to 1.1 after that steep decline earlier on, and people were foreshadowing a decline. Well, we started to see that. There's also a lot of Powell fears going on there. So that's what the market sentiment tool does. That's how it's set up. It's these 13 indicators. Each one has their own fence that are set historically. New 52-week stock highs and lows is pretty obvious as far as it goes. It's bearish when the value is above 8. We're at 10, 9.8%. Okay. So what is this? It's the 52-week highs divided by 52-week lows. Because you see, very rarely do you get 10%, this ratio up to 10%, 20%. In those cases, it reverts back to almost just 2%, 3%. But on the same phase, it goes down to -4. That's when it's bullish, and you expect to see a market change because everything's been hitting a bottom. Too many stocks have been hitting a bottom compared to the ones trading at their highs, and the market is going to tip back into balance historically. VIX, same way, but all of them are the data scanned and back through 2014. That's the market sentiment tool. Of course, you have a help video right here at any time, just to review what that market sentiment tool is. That's from 2013. And if I'm not mistaken, there we go. And I want to go ahead and go to videos. That's where I want to go, Rick. And just in the search field on Power Options, just go market sentiment. All right. And concepts of the market sentiment indicator, that's from 3 years ago. 1 year ago, using the market sentiment tool for call or put buying. There's some specific ones in here. For adjusting or placing trades. 8 months ago, review of using the market sentiment tool. It's only a 9-minute presentation. That's probably the one I should highlight there. Trade adjustments with the market sentiment tool. And so there's other ones here for the market sentiment tool that you can go into. 12 minutes on the market sentiment tool. That's a good short one as well. But it pretty much goes through what we just did, just a little bit more in depth and maybe a little slower, Rick, in that case, for more insight into the market sentiment tool.